Hello ladies and gentlemen, and welcome to another backtesting video. Yes, I know I have not done a backtesting video in a little while, and I thought let me jump on back to it. And I know a lot of you guys are enjoying the backtesting content, and I thought, you know what, why not? Let's backtest and show you guys how I backtest and what am I seeing in the markets and how I look at things, because it's quite different to how my current backtesting videos are. You guys would have noticed I do bar replay, but again today we are going to be backtesting Aussie US dollar February 2020. Okay, so 1 month only, and I'll show you guys exactly what I am looking at. So guys, as you can see here, this is the chart. So as you can see, what I typically do, I'm sure you guys know, I have these two lines between February just to select it out. Now, one of the things is, guys, for anyone that's watching this for the first time, I do enjoy using hollow candles. Why? Because it allows me and my eyes just to focus purely on the wicks, the size of the candles, the bodies of the candles, and it doesn't detract. Again, like I say, for me personally, using the colors of the candles for my strategy is like an indicator. I don't really care too much about the colors of the candles. If I wanted to know the color of the candle, then I just have to look at the open and close of each candle. So again, like I say, it's not really important for my personal strategy. But guys, the way I like to backtest compared to last time is going to be a little bit different. Rather than doing bar by bar replay, what I do now is actually I have the whole chart open, so I'm able to read price action and find my high probability entry points. Okay, so guys, let's begin. I'll show you exactly what I mean, and it'll be very, very good for you guys to see exactly what I'm looking at and how we can get hints of what the market will do next. Okay, so we know with the Aussie US dollar, its main characteristic, as you guys know, I'm a trend trader. Its main characteristic that I like to look for is this corrective price action, right? So it likes to move up correctively. Okay, it's funny, I just drew this, didn't even realize, but essentially we've got a corrective trend here, and also it can like to descend correctively. So it likes to move correctively, but also, of course, like I say, it does like to trend. If we see these nice heavy trends, of course I'll be looking to get involved. And the same to the upside. Now also it does like its flags, nice impulse and nice continuation flag. Okay, so again, let's have a look and show you guys how I'm going to be reading price action in February 2020 Aussie US dollar. So guys, we entered into February in a range, right? Very easy, very clear to see that. The reason being is because we had a high here, okay, and we've got a low here, okay, and you can clearly see within this we were ranging. Now you can see, how did we break out this range? We would have had liquidity sitting below here. We took it and we started to impulse up. Okay, we broke this high, the next high, with quite a bit of momentum. So if I get rid of this, guys, we broke this high with momentum. Okay, and then you can see what happened after that. Well, we stagnated, we broke this high, retraced, broke the low, retraced. Okay, giving us evidence that we're going to be range bound. Why? Well, the reason being is because look, if you guys look at this, once we've broken this high, right, you can see we've broken it with this wick here, and we've pulled back. And same to the downside with this kind of like inside bar. We broke this low down here. This is not seeing momentum, and we start to pull back. Again, giving us a hint that we don't have an idea of where we want to go. So again, we were waiting on our hands, waiting for more price action. So as you can see, guys, look what happened next. If I get rid of these drawings, you can see that we started to push up and started to come up in a corrective manner. Okay, so you can see, guys, how we've come up. We've had a high here, broke this high, retraced, broke the high, retraced, broke the high, retraced, and then we broke this low, retraced, broke the high, retraced. And one of the things that's very important for you guys to spot, if you're able to spot this, is the liquidity grab. You can see that price definitely wants to go upwards. It's struggling, right? So what has it done? It's come back down, taken out liquidity. And where has it taken out liquidity? Well, it's taken out the liquidity on this, from this low. So under here would have been liquidity, right? Think about it. Why? Well, retail traders are seeing this. They're seeing this trend. They're like, okay, well, buyers are here. Where do we put our stops? The last low, right? Even below the next last low, which is here. And I bet you this is taken out. So the low is 243. Low here is 236. Exactly. So you've got liquidity there. And you also have liquidity here, right? You can see you swept two kind of packets or pockets of liquidity with this candle, had that kind of momentum, and again, continued up in the trend. You can see that we just came up, pull back, came up. Okay, now again, what happened after that? We had a lot of momentum, and then we had an aggressive retrace, right? And you can see that we started to pull down a little bit aggressively, saying we could have had a longer term liquidity grab. Did we? Looks like we did. Yeah, look, we would have had a box of liquidity here, taken that liquidity, and start to see that momentum. So even in this kind of scenario, I personally wouldn't be looking for anything till we break the kind of high here, the last impulse high, and the low, which is somewhere around here, right? So again, we ranged, broke this low, retraced, okay? Not seeing any commitment, okay? Broke the low, okay? Retraced, broke the low, formed long wicks, and retraced again, pulled up, okay? Coming out of this in a descending manner. So far, we have not seen any real nice opportunities to get involved, okay? Even though we've had 2 areas of corrective trending, they've not given us the evidence or the confidence that I want to enter or look for an order, okay? So we've come from a range into an ascending, into a range, into a descending, and it looks like we've impulsed down, okay? So let's have a look and see. Let me get rid of these drawings so you guys can see this a little bit easier. Okay, so again, we've pushed down, we've had a low here, okay, we've had this range and we've broken that quite impulsively, formed a large wick, again, retraced, pushed down, broke this low, retraced, okay? So again, even with these 3 candles here, we could tell that momentum was likely to die. Why? Well, if we were actually gonna have heavy momentum, we would have had a 1 candle retrace and a strong break, okay? But we didn't get that, we got 3 candles and we broke the low with a wick. It's giving us a hint that momentum might shift, okay? But again, after this wick, we have a high here, we broke the high, retraced, okay? Because we broke this high, formed a wick, and the next candle is a pullback candle. So again, if we're breaking the low, retracing, breaking the high, retracing, we're not having any momentum anywhere, so we're more likely to go sideways. That's exactly what happened, okay? Now next, guys, you can see, we had this range, we broke the high, okay? With some momentum, retraced, broke the high, retraced, giving us the evidence that, hey, we actually want to, well, have got an ascending nature. We're not seeing that momentum up. Now, one of the things that's important to note is at this point, right, I currently have something called what you call a market bias. And the market bias I've noticed, especially from this candle here and what's happened here, is that we're having this formation where we've got an idea of where the market wants to go. So even from this candle, we'd have had a liquidity takedown here. Okay, you can see because markets reacted. So we've got a hint that the market wants to go up. Now, even in this most recent price action where we've broken this high, retraced, as we're actually breaking these lows, retracing and coming down correctively, I know that this is essentially going to be a liquidity collection for price to continue up, right? Okay, why? Well, you're getting the evidence that here we've got the possible reversal of a market bias. You've got more confirmation here of momentum coming up, and you can see that sometimes they'll fake out. They'll fake out this move. They'll take out the liquidity under the last low, which is this candle, because the high is that if you've got a high here and you've got a low here, right? You've pushed up, that your liquidity is sitting here, you've wicked into that, okay? And then they're creating more fake outs. This is what they're doing. Buyers are coming in, liquidity is sitting here, taking it out, okay? And that's exactly what happened. You can see we pushed down, then we started to see a little bit of a push up. But this is the thing, as we pushed down, right? We collected liquidity and we pushed up and we didn't really see a strong push. This is actually happening over many, many hours, if not like a day or so. So it's a very, very long time, suggesting weakness. So now from this price action saying, hey, we really want to push up. Now I'm starting to see weakness and we're not really going to get a strong push up. And you can see, guys, this is what happened next. So you can see I think we probably had a high somewhere here and a high here. We broke this high, not seeing much momentum, retraced, okay? Then we broke this high, solid candle, had an aggressive retrace, okay? Strong wick and an aggressive retrace, okay? Again, what happened next? Broke this high, just small candle, retrace, broke the high, retrace. So you've got the evidence, even from this location here, that price was going to be struggling. If it was going to be moving up, it would move up correctively as it did, but it would be struggling to move up. And that's exactly what we had, right? So we had this kind of corrective move up. Now, let's continue and read on, see what happens next. So far, personally, I've not seen any areas or any kind of entry points where I personally want to get involved because, like I say, we've just seen corrective behavior and ranges, exactly as I've explained. So now, how have we broken this high? We've broken this high, retrace, broken this low, again, with one strong candle, and I've had an aggressive retrace. You can see that, right? So again, if we're not having the momentum up and we're kind of faking this side down, right? We had a fake out in a sense, right? Because we pushed down heavily, came back up with aggressive momentum, right? If we've got no momentum up, no idea of, well, no strong momentum down, we're going to be range bound. That's exactly what we've got. We can see that after that, we had this kind of range, okay? So again, for me personally, I'm still not spotting anything. Even if I was to say, okay, well, we broke this high, retrace, broke this low, retrace, broke this low, retrace, and kept drawing these kind of breaking highs, retracing, breaking lows, retracing. Again, we can clearly see it in a range. I mean, we don't really need to be looking at these highs and lows breaking within a range, okay? Unless we are going to establish a market bias, okay? Which is something that I probably won't explain in too much detail now. It does require its whole learning video on its own. But for me, We're in a range, clear range. So as a trend trader, I'm not looking to get involved until we see good commitment out of this. Now, what's happened after, okay, you can see at this end of this kind of push down out of this range, we can see we're starting to weaken. Why? Well, look, we've got this kind of retracement candle and the lows of each candle just being broken. Then we've come up, okay, and we started to have this kind of range in this location here, saying, hey, we don't have that much momentum going down, because if we had heavy momentum going down, we would have had this push down, one candle retrace and another breakdown, continuing a strong trend. So this is telling me, hey, this price action here and this price action here, and also the fact that we have a low here, we broke this, didn't see much momentum and had an aggressive retrace, says, hey, we are running out of steam. This is all evidence we're running out of steam. Now, for me, at this point in time, we could have done a few things. We could have either taken out liquidity at the bottom, right? Some longer term liquidity that's sitting beforehand and actually started to see that commitment up. Or we're going to actually collect more liquidity before we actually start a downward push, which, guys, is exactly what happened. So you can see this, right? You can see that, hey, we started to come up, we broke the high here, retraced, broke the high here, retraced, broke the high here, retraced, broke the high here, retraced. We had a squeeze here. We had this ascending nature collecting more and more liquidity. What's going to be happening in these areas here where sellers coming in here, the stops are up here, being taken out. Same around here, sellers coming in, stops are being taken out. Until we got enough liquidity to actually engage in a nice trend or push. That's exactly what happened, guys. We broke this low. For me, actually, I would have had an order on here. Okay, but I don't think it wouldn't have been tagged in. So if I get rid of all these drawings, guys, I would have had an order on right at this location here, at this low. But you can see, guys, this handle wouldn't have tagged it in. So we pulled up, retraced with one count, and started to see momentum down. Okay. Now again, this is the thing, guys. We've got a wick at the end, but we've broken this low with momentum. Okay. Now again, like I said, we've got a nice idea that the market bias is down. We've got the momentum here. We saw us running out of steam, so we collected more steam, and then we continued. Right. So again, for me, all the evidence that we want to go down, but I've got to find the high probability, low risk entry point, right? So which is the retest at the last level. So we've pushed down, okay? We've come up. We didn't see any shift in momentum with the first 2 to 3 candles, did we? If we were taking out potential longer term liquidity here, where you've got buyers here, where their stops would be below the last low or even below this kind of low to be safer, we didn't see that push up, giving us more confidence that we want to go down. So again, I would have personally looked for, like we said, a continuation flag or the retest. So even at this level, as you can see, guys, we've actually come up, okay? So we've had a bit of a range. My order would have been on here, okay? When would it have been on? Well, it actually would have been on after this candle, okay? If it were, I wouldn't have set it on after this candle, because if we had one candle that came up all the way like this, that would have shown me a shift in momentum, even though unlikely, because of what all prior price action is saying. It's unlikely to actually just impulse up and do that. It could do that, market can do whatever, but considering all the evidence that I've picked up, it's more likely that it will just reject. So again, my personal order would have been on after this candle at this level. So I've got no idea if it would have stayed in or out. Let's have a look. I would have used a 12 pip stop loss. So level the inside bar, 12 pips. All right, great. So it would have been in. So I'd been tagged into this trade, set my order after this candle after 11 p.m. Would have been tagged in. Looks like a news candle, to be honest. So fine. And we started to push down quite heavily, right? So again, like I say, we are now in an established trend. You can see we've pushed down, right? Come up, push down. Now again, we started this corrective trend. We've broken this low, no momentum, retraced, broken this low, no momentum, retraced, and now we would have broken the high. Yes. So there's a high here that would have taken me out. You can see we've taken this out with a wick, collected more liquidity and started to engage in a deeper push. So for me, this trade would have been ended at this location here. So it would have been around here. Okay, so we would have locked in around 4.56%. Okay, so you guys can clearly see that. That would have been how I entered the trade. We got the idea of the market bias, where it wants to go. We saw how it collected liquidity. We found the entry point, and we've got a lot of good confirmation here. More than happy to have set my order and collected this amount of percentage from the market. Fine. Now, let's continue. How did we actually continue this? So we broke this low, retraced, ranged, broke the low, retraced, broke the low, retraced, okay? Giving us this descending correction. Am I surprised that we're moving correctively, seeing as I've said at the beginning of this video, hey, this pair likes to move correctively? No, not surprised at all. Did I get a safe entry point in either of this to continue the liquidity collection and move with the corrective trend? Not really. Why? Well, because we've got intermediate price action, right? You can see we've ranged and then we've broken the low, retraced, had a little bit of a range, broken this low, retraced, right? Again, not giving much confidence that, hey, we're going to continue this corrective trend. And as you can see, that's what's happened. We then started to push up. We broke this high, okay, with quite nice momentum. But like I said, you can see, guys, we had a bit of a gap, and that is exactly, this is to do with the weekend, right? So for me, again, even when we come up to Friday evening, I'm not looking for trades. So we had this gap. So again, for me, I wasn't looking for anything. I don't even think there was anything available. There wasn't. So for me, we'll skip that bit and let's continue. So as you can see, guys, what happened after? Well, we broke this low, okay, with the open. This is quite a big gap, retraced, okay? So currently, we'd have a low here, we'd have a high somewhere up here, right? So you can see, we just started to be range bound, okay? Now again, not looking to get involved in this range. So what happened after? Well, if I get rid of this range, how did we come out of this range? Well, again, we moved out of it correctively. We had this low here, broke this low with a candle, pulled back, retraced, broke this low, retraced, broke this low, retraced. Now, for me, again, this is where I actually would have considered an order. Would I have considered the order here? Yes. Well, look at this, guys. So this is what I mean. When we're actually in this kind of corrective price action, where are we willing to put the order, right? So you can see, guys, we're breaking this low, retracing, breaking this low, retracing, breaking this low, again, retracing. Now, for me personally, I wouldn't have looked for an order or taken an order at this location, okay? Why? Well, again, price is actually, if you look at it a little bit carefully, we broke this low, retrace, we actually broke this high, retrace, okay? So this is giving me evidence that, hey, we've got a lot of weakness. And for me, in terms of a one candle break at this level, considering prior price action, okay, and this kind of weakness I just pointed at, I'm not really going to be placing an order. I'm not risking 1% on that kind of area. So again, it would have actually ended up in profit because I think you would have been tagged in at this level. Yes, you would. And you would have been able to secure in a little bit of profit as you come down. But again, like I say, not for me, doesn't fit my plan. Considering price action and what's happening here, there's just too much weakness for me to look to get involved in a corrective trend. Now we've broken this low, retraced, broke the low, retraced, broke the low, retraced. Then we broke this high, retraced, broke the high, retraced. Do we see a little bit of, yeah, we broke this low, retraced, we pushed up again. And you guys can clearly see we came up in this ascending manner. So we've gone from a descending into an ascending, okay? So for me, I'm not looking at anything until we get out of this. You can see after, if I get rid of all these lines, at the top, what happened? Well, we've had a high here, we've had a low here. How did we break this low? We broke it and retraced, okay? Then again, what happened after that? We broke this low and started to see momentum. Now, this is a good sign because we didn't actually get this kind of liquidity take like we had here. You can see in this price action here, we kind of did this. Came down, came up, grabbed liquidity and pushed down. In this scenario, we're in a trend, period, right? So again, we've got heavy momentum down. So again, I would personally be looking for setup. So let's have a look. Was there anything here? Well, no, we just had a strong trend and then we just had a volatile nature. You can see we pushed down with momentum, pulled up, pushed down, broken this low with momentum, had a pull up, broken the low with momentum, and now had an aggressive retrace saying, hey, you know what? We've gone too far. We need to reverse, okay? So again, that is done. I think that is it. That's the end of February. You can see there was only one trade throughout this that fit my plan. I showed you the trades that could have been entered, but like I said, does not fit my plan. And yeah, like I said, it was this only one trade that bagged 4.56%. And that was it. One trade in February, okay? Being a very, very patient month. So there you have it, guys. That is how I backtest. This is how I read the market. This is how I like to actually spend my time when I'm on the charts because it lets me see the whole of price. I know if I'm going to enter a position or not. I have my checklist next to me. I can be like tick, 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 tick. If this fits it, then I'm in it. If not, then I'm not even going to look at it. It doesn't matter. But the best thing about this is that for me, I'm able to see how price moves. And it confirms in my subconscious that, hey, price does like to move like this. And it helps obviously build my confidence with this pair, especially when I'm trading it. Okay, guys? So guys, I hope you enjoyed this video. If you had any questions about this video, please feel free to write it down in the comment section below. But I know some of you guys will definitely be happy that I've done another backtesting video. But there you have it, guys. That is the Aussie US dollar. Hope you have a fantastic day and a fantastic trading week ahead. Take care and peace.